Good morning, everyone. It's Henry on the live stream. I appreciate you for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. Thank you so much for your confirmation. So in today's live stream, we're going to start by looking at the US dollar, what the US dollar is doing so far today. And if we go to the daily time frame, as you can see, we're currently resting at the extreme premium zone right now. So two things are involved right here. Is either we're going to see a rejection of this key level to potentially mitigate this inefficiency. And at this inefficiency is an area we'll potentially be looking for a buy setup for this to continue to the upside, because this right here is a low resistance liquidity, and I wouldn't really be surprised if the market continues higher to run above the buy side liquidity. And after that, if we go to the weekly time frame, as you can see, we still have this inefficiency resting right here as well. And on the weekly time frame, you can see the weekly candle right here. It's opened and then went to the downside. So I wouldn't really be surprised for it to come down, mitigate that inefficiency, and expand higher to run the buy side liquidity. So there isn't really much to work with on the dollar besides just this analysis. This is literally the only thing I can see right here. If we're looking at the daily time frame, this is the only key level, and if price comes down into this key level, I'll potentially look for a buy setup for this to continue higher, targeting low resistance liquidity right here. So that is my analysis on the dollar. We're going to take a look at the euro as well to see what the euro is doing. So for euro, as you can see, we mitigated this key level, and I said last week, if we were to go to the upside on euro, this key level would be the last line of defense. If this key level fails to take price to the upside, then I really wouldn't be surprised to see euro come to the downside to run the sell side liquidity. If we were to continue to the upside on euro, I really wouldn't have wanted it to come this low. Price really came too low for me to be a buyer in the market, but at the same time, it doesn't mean it's impossible for price to continue higher. It's just the fact that price coming down this much is just giving me a telltale sign there's a high chance that price could potentially continue lower to run the sell side liquidity. And if we look at the weekly time frame as well, the weekly time frame also doesn't look so good in my opinion, because we still have this inefficiency right here, and we still have liquidity resting right here as well. So if we even go down to the monthly time frame as well, using the Fibonacci from the high to the low, you can see this range right here, our extreme discount zone. The extreme discount zone resting right here. You can see that very clearly. That will be a potential key level. If we do see price come into this position, that will be a beautiful area for a swing buy setup to potentially take this to continue to the upside, because overall I still remain bullish on euro, but that is if we're looking at the 12-month time frame, 6-month time frame, and 3-month time frame perspective. I'm very much bullish on that. But on the intraday levels, weekly, daily, it doesn't really look great for the bullishness, because we're seeing this high low, drop, break of structure, came back, retest, displacement, retest, displacement, retest, displacement. Yes, we're piling up lots of liquidity resting above these highs, but the same goes with this low as well. The same goes with this key level as well. If we go to the monthly inefficiency resting right here, this is liquidity. This liquidity has been here for almost, it's been there for like 8 months. 8 months of liquidity, and it's not even 8 months, it's literally over 1 year that the market has been piling up this liquidity resting right here. So nobody knows when it's going to get mitigated, what is going to get mitigated next week, next month, by the end of the year. But if this key level eventually gets mitigated, it will be a beautiful area to look for a swing trade setup for this to continue to the upside. This is the kind of setup that you get into and you confidently hold that setup for months, because you're not anticipating for this setup to just drop in here and then get out of the trade immediately. This is the kind of trade, when I get into such a trade, I'll hold the trade for a very long time, scaling out profits, because overall this is low resistance liquidity and it's still eventually going to get taken. Low resistance liquidity is still going to eventually get taken. Another low resistance liquidity that will eventually get taken, and if you measure from this key level to those highs, that is a 21% move to the upside and 2,000 pips. $10 per pip on this trade will be making around 21,000 just on one single trade. So it's not really something that is going to happen overnight, but when it does happen, it's going to be a big move if it does happen, because at the end of the day, it's all probability whether price is going to come there or not. We can still reject off this key level and continue higher to run the buy side liquidity, because overall from the 12-month time perspective, we still remain bullish on euro US dollar, and you can see that very clearly, consistently creating higher highs and a higher low. So I wouldn't really be surprised if we continue higher from there. I also wouldn't be surprised if price wants to come down to run the sell side liquidity resting right here on the 12-month time frame, because if we still go to 6-month time frame, you can still see there's liquidity there. 3-month time frame, you can see on 3-month time frame we still have liquidity resting right there as well. But don't forget, we can still reject off this key level. So let me wipe everything on my chart. We can still reject off this key level where we are right now, but don't forget we mitigated this 3 months inefficiency, and then we saw this huge displacement. Price came back impulsively, displaced again to the downside. So we could still see an expansion to continue higher, but don't forget the fact that we still have that monthly inefficiency resting right there. Price could decide tomorrow, I want to come down here. This is my destination, and all road leads to downside. And we're not even so far away from it. It's just about it's about a 3.2% move, which the market could do in like a month. In 1 month, price could literally come down here. It's only going to take price 2 weeks of consistent move to the downside, and we're going to be there. And if you even measure this one, this candle right here, this candle is 7%. So in a month, price made the 7.8% move. So which means in 1 month, price can come down in here very comfortably. And if we're bullish in that same 1 month, it can still start showing us a rejection for it to continue to the upside, because overall I still remain massively bullish on euro. So that is my analysis on euro US dollar. If you do have any questions, feel free to drop it in the charts. The next thing we're going to look at is AUD US dollar, what the market is doing on AUD US dollar. It's really been a very complicated price action for AUD US dollar, but the only thing I'm really interested in, I'm not going to try to take any trade on AUD US dollar unless I do see price come down into my key level, and my key level is this inefficiency resting right here at the discount position. I'm not going to be buying at a premium because we're currently at a premium. This is our range, our weekly range low, weekly range high, and within that range you can see how price came to this extreme premium and displaced to the downside, came in there again, displaced to the downside again. Now this doesn't mean that price wouldn't be able to come up here. Don't forget, we still have this inefficiency resting right here, which is potentially a drawn liquidity, a magnet attracting price to the upside. And I really wouldn't be surprised to see this inefficiency right here. I wouldn't be surprised to see this inefficiency attract price to the upside to mitigate this position. So the only thing I'm just going to be watching closely is the fact that we could come in here, but at the same time, there's this inefficiency here that price could potentially come down to mitigate. Price could potentially want to come down here, run the sell side liquidity, and come down in here, but there isn't any guarantee that's going to happen. The market could decide that it wants to continue higher from where we are now, and that could happen, and it will just keep going to the upside until it comes in here, and then it could still come in here, and then we see that rejection to come back lower. So we don't know what the market is going to do. The only thing we're working with is key levels where we want to buy. We're not going to try to sell it because overall the market structure from top 4 time frame is showing us bullishness. So all our analysis is for us to look for an opportunity to buy it to continue higher, opportunity to buy and buy to continue higher. And right here, this is the only opportunity that I'm seeing right here, a discount zone. Even though you can see price still came into that discount, mitigated it, expanded higher, came very close, expanded higher, took liquidity, dropped down again, closed again, rejected, went back up, took liquidity. We're seeing a rejection. We're currently at an inefficiency, so most likely a lot of traders are going to be buying from here, which I don't see anything wrong with anyone buying from here. It's very, I don't really see any reason why someone wouldn't really want to buy from here, because we have an inefficiency, we're bullish. This is a very perfect area to look for a potential buy, targeting the inefficiency resting right here. But personally, I'm not going to try to trade this because I've learned quite some lessons in the market. When you try to buy from key levels like this, sometimes the market will just humble you and literally tank to mitigate this position eventually. So the only thing we're going to do in this kind of situation is we're just going to be patient. If it goes up here, awesome. If it comes down, magnificent. It just means coming down here gives us that opportunity we're looking for to buy it to continue higher. So that is my analysis on Aussie dollar, and if you do have any questions, feel free to drop it in the chat. So the next one, we're gonna have a look at, we're gonna take a look at GBP US dollar, what GBP US dollar is doing, and then we're also gonna take a look at gold. So for GBP US dollar, I'm watching this key level and inefficiency on the daily time frame, and for me to look for a potential buy, I would like to see a 30 minutes break of structure. And so far for GBP US dollar, you can see nicely price mitigated that key level, created a higher low, eventually broke structure. So if I want to buy it, this would be a potential area for me to buy GBP US dollar. Stop loss right here, and then potentially continue to the upside, targeting the highs resting right here. So this is what I'm looking at on GBP US dollar, irrespective of the fact that I don't trade this pair, but I'm bullish on this pair. And if we look at weekly time frame as well, weekly time frame will still have an inefficiency aligning as well with that. And if we go to monthly, monthly still looks bullish for me on GBP US dollar. And if I remove everything on my chart, monthly still looks bullish for GBP US dollar. And what I'm seeing on monthly for GBP, I'm seeing this key level, this highs right here, low resistance liquidity. So overall target is gonna be this high, in as much as I'm not gonna just randomly just jump in. But if I'm to take a trade on GBP US dollar, this is gonna be it. This right here is gonna be the trade, and I'll be targeting that high. This high is right here. It's gonna be a swing trade. I'm just gonna enter the trade and just allow price to withstand. So this is what I'm watching on GBP US dollar, and for the swing trade perspective, this is my target. But if I'm to take a trade on it, I'll just be targeting this high right here, low resistance liquidity high. I'll be targeting this one because everything just seemed to align perfectly well for GBP US dollar to rally above these highs. So that is my analysis on GBP US dollar. If you do have any questions, feel free to drop it in the chat. And I think I'm gonna post the trade setup on this one, on this trade. The entry is gonna be here, and the stop loss is gonna be here. So we're gonna take the trade and wait to see what price is gonna do. So if the trader activates us, if it comes back for a retest and activates us, that'd be very beautiful, because we already have a significant high and significant low, and then a significant break of structure. And if we invert the chart to still see what it looks like on the sell side perspective, still looks very perfect. Perfect trade, low, high, break of structure. So in as much as the dollar is showing us a lot of bullishness, the one thing we're doing is we're focusing on the structure we're seeing on any asset class. So any currency pair, for example, this one is British pound US dollar, and then in this currency pair we're bullish, we're looking for opportunity to buy, and price came into our point of interest and is showing a significant break of structure. We're going to look for a buy and buy it, irrespective of the fact that the dollar is showing us bullishness, that it wants to keep going to the upside. Remember, anything can happen as well. And like I said, right here is an area that I'm anticipating to see a potential reversal on British pound US dollar. And if we go to the dollar, if we're bearish on the dollar, this is the perfect key level for us to reverse. If we don't reverse from here and go to the downside, this high will get taken. So for the dollar to go to the downside, it needs to happen from here. It has to happen from here. If it fails to happen from here, this high will get taken. Now, this is the last line of defense on the dollar. We go to euro. This is the last line of defense for euro. We go to the pound. This is the last line of defense for the pound. What does that tell you? It's giving you the telltale sign. If we're going to go to the upside, it's going to happen from here. Now, there's no guarantee it will definitely happen from here, but there's a chance, a high chance that it could happen from here, and we could continue to the upside. For British pound, US dollar, for euro, it's not a guarantee, but there's a high probability that is going to happen from here. And that is the reason why we're going to be getting into a buy setup. We're going to be placing a limit order from the highs right here. The reason, because our last down close candle for expansion is resting right here. That is why our entry will be here. We'll place the entry and we'll allow price to withstand. If it eventually decides to come in, mitigate it, and then expand higher, awesome. If it still wants to come down and run the sell side liquidity, it is what it is. That's trading for you. Sometimes it will work, sometimes it wouldn't, but all that matters is to always take the trade when you see the setup present itself. So that is my analysis on British pound US dollar. If you do have any questions, feel free to drop it in the chat. So another one we're looking at is gold. Last week I talked about gold, my analysis on gold. I said if we're going to see a rejection to the downside on gold, it's going to be from this key level, because this was the last impulse, took liquidity. You can see that low resistance liquidity is resting right here. You can see that very clearly. You can see how price rallied above it, expanded to the upside, took those liquidities, dropped to the downside, broke structure right here. After the break of structure, we have this ample, huge inefficiency. So we want to see price come in there. Once we're in there, we're looking for a potential shift in market structure, high, low, high, low, high, drop, break. So I personally wouldn't trade this. I personally wouldn't try to sell gold because I'm bullish on it. But if I was to sell it, this would have been where I would have capitalized on it to sell. And our targets, low hanging fruit areas, I'll just look for 1 hour inefficiency and exit. For example, here, if I was in the trade, I'll just exit around here, because anything can happen. It can still reverse and continue to the upside. That's why I personally wouldn't try to sell it. So if you do have any questions based off my analysis, feel free to drop it in the chat. And last but not the least, my analysis on Euro GBP. I talked about my analysis on Euro GBP and how I want to see Euro GBP come to the upside right here, and then we look for a sell. And you can see how price each time it went to the downside, still went up, downside, up, downside, up, downside, up again. I won't be surprised to still keep seeing that up, down move until we eventually come in here. Then I'll look for a shift. If I see a shift to the downside like this, then I'll look for a sell. But if not, I'll just be on the sidelines. If I don't see that kind of shift and price comes there and then still continue to make higher highs, then I'll just be on the sideline, because it simply means that the sell is not going to work and it still wants to continue to the upside. So that is my analysis. I appreciate every single one of you for tuning in. If you do have any questions, feel free to drop in the chat, and I'll talk to you all in the next live stream. Have an amazing day, everyone.